Excellent. So I'd just like to take the opportunity to welcome you all to the fourth Alternative Investment webinar hosted by Wealthics Global Partners. On the webinar, we will not be discussing commission rates for products, but I'm pretty sure from everybody that I can see is attending the call that about 90% of you already have TOB. But if you don't yet have terms of business, please feel free to drop Manuel, myself, an email or info@wealthics.com. During the course of the two presentations that we'll have today by Peter Doyle, I ask you to submit questions using the questions tab that you'll see below. And please feel free to do so. If English is not your first language and you speak Spanish, please feel free to submit your questions in Spanish and Manuel will happily translate them and bring them across to Peter. So that just leaves me to say, Peter, welcome to the webinar. Good to see you again. Obviously, good to have a quick catch-up chat. Peter is CEO of Stag's Head Distribution and a company that Wealthics Global Partners work very closely with. And some of you on the call will have met his business partner, Franklin, at our Panama conference in March. So, Peter, I'd like to hand over to you to talk about your two products today.
Brilliant. Well, thank you, Kevin. Thank you, Manuel, for having me back once again. I will try and keep this as engaging and as short as possible for you guys. Obviously, I know it's been an interesting year for everyone in the sort of fixed income arena. I think with our company, with what we've done at Stag's Head, is to create some of the market's sort of leading fixed income solutions, namely Neutral Capital Finance, PLC. Some people refer to it as Neutral Fuels. And then the other new bond that Franklin presented at Panama conference this year is DCM, which is the Dunross Capital Management US Multifamily Housing. I will start my presentation with a little screen share, and I'm just going to play you guys just a quick video, and then we can obviously go into the nuts and bolts of it, and I'll go through a little bit more detail. Here you go, here's the video.
We're always looking for ways to reduce our carbon footprint and our impact on the communities in which we live and work. When we heard that the UAE government had the same goals and wanted to partner with local companies, we set out to work together to make the UAE a cleaner, happier country. After extensive research and reviewing our recycling processes and ideas from other countries, we asked ourselves, how can we do even better? That's when we met Neutral Fuels, a company which converts used vegetable cooking oil into biodiesel. Could we take used oil from our fryers and use every drop to fuel our delivery trucks? Then we wanted to take advantage of McDonald's existing production and delivery systems to create an environmentally friendly and economical solution. To optimize our carbon footprint savings, we went even further, creating a highly efficient closed-loop system. Don't panic, I can explain what that means. Here's how our closed-loop system works. Firstly, we deliver food, packaging and other goods to a local McDonald's restaurant. We bring a specially designed recyclable empty oil container which stores used oil safely and cleanly. When our delivery truck arrives at the restaurant, we swap this empty oil container for the restaurant's full used oil container. We do this at every restaurant on our circuit. And then we deliver the containers full of used vegetable oil to the Neutral Fuels biorefinery, which is conveniently located close to our distribution centre. The used oil containers are then offloaded before the delivery truck is refueled with the pure biodiesel made from previous deliveries. Our used oil is filtered and heated. It is then mixed with methanol and a catalyst called sodium methylate. After about an hour, the catalyst has done its job. The used cooking oil has become raw biodiesel. This mixture is then pumped into a different series of tanks where the different elements are separated and recovered. Finally, the biofuel is pumped into a storage tank from where it is then dispensed into the McDonald's trucks. 1 litre of McDonald's waste cooking oil produces 1 litre of biodiesel. What we have achieved. McDonald's UAE exclusively uses 100% recycled used cooking oil to fuel its entire fleet of trucks. Over the past 4 years, our trucks have travelled over 5 million kilometres using 100% biodiesel, reducing our carbon footprint by over 4,000 tonnes. This distance is the same as travelling 125 times around the world. or to put it another way, 6.5 times to the moon and back. Our ultimate partnership prize was when the Dubai Road and Transportation Authority, RTA, gave McDonald's UAE and Neutral Fuels jointly the prestigious Dubai Award for Sustainable Transport in the Environmental Protection category. We are proud to say that we are the first food company ever to win the award. We continue to look forward to finding even more ways to reduce our carbon footprint in the Middle East, fulfilling our commitment to discovering other ways we can give back to the community and environment for years to come.
So that's just a little brief introduction, guys, to Neutral Capital Finance, or Neutral Fuels, as we like to call them. The reason I played you that link just...
food versus fuel conflict, with more farmlands being diverted for...
The reason I've obviously used that particular link just to show you from YouTube is it's because it's actually from McDonald's website themselves. It's from McDonald's own YouTube channel. Rather than me just creating something and saying it's McDonald's, you can actually see there it is actually from McDonald's own YouTube channel. In addition to McDonald's using the biodiesel in the UAE, Neutral Fuels are also supplying Nestle, Del Monte. They've teamed up with Enoch, which is the Emirates National Oil Company, and they've been supplying biodiesel for them for the last 4 years, which led them to do a contract with ADNOC, which is the Abu Dhabi National Oil Company, which is actually about 10 times bigger than Enoch. This has then led them to formalize a relationship with ADNOC. They now control 2 sites within ADNOC's facility in Abu Dhabi. They are now supplying biodiesel to all of the ADNOC facilities. They're using it on the ADNOC ships, which are now the oil tankers going out to the offshore drilling rigs. They're using the biodiesel on those very big ships as well, the oil tankers. And they've actually now substituted a use for the raw ingredients of the oil to actually use as lubricants on the actual drilling rigs themselves. So there's got a few different permeations in how it's been used and perceived. Just recently, the news announcement, I know some of you guys are promoting this already and are already aware, so apologies if I am repeating this, but they were also invited recently and have won a contract with Emirates Airlines to provide biodiesel for all of the ground transportation. That's all the little jeeps and little transportation systems that they use to bring up all the luggage to the different airplanes. It also is for all the little coaches and buses that transport not only the customers around the terminals, but also to the staff that go from the staff quarters to the Dubai terminals. So all those little small little buses and transportation links are all now using their biodiesel from Neutral Fuels. That's a huge contract in itself. What I love about Neutral Fuels is they're just constantly growing and expanding throughout the whole of the GCC. They've also, in the last few weeks, signed a contract with a big school out in the UAE, which has about 6 or 7 branches. For those that don't know, the UAE uses the American sort of school bus transportation system, the big yellow sort of coaches, single-decker coaches. Now Neutral Fuels has a site at the GEMS Wellington site, which is a big school brand out there. And I think there's something like 120 vehicles are actually parked there now. And again, they're all using the biodiesel. That is huge for a number of reasons. Those buses are doing, I think, 4 journeys a day, every day on the school days. So again, it's another permeation. It increases the further demand for the biodiesel in the region. Additionally to that, they've obviously set up a site in Bahrain, which went live, I think it was about a week and a half ago now. They've obviously got their sites in South Africa, which will be going live in the first week of December. I think it's going to go back to about the 10th of December now. They've obviously got 2 sites in India, one in Delhi, which is fully operational, as a lot of people will know. And they've also increased their demand in India so much so they've now done a deal with the Indian Oil Company, which actually may not sound that big, but it's actually a bigger deal than the Emirates deal that they've signed in terms of size and demand for the biodiesel product. The Indian Oil Company, I believe, is actually owned by, or partly owned by, the Indian Prime Minister. So it's huge in terms of how their global presence is spreading throughout the whole of the GCC and MENA regions. They've won loads of awards again recently. There was a link that I've sent to Kevin, which will go out on our next newsletter that will get sent out to you all. In regards to, they've won a very prestigious award in the region, and they were up against some pretty hefty competition. They've been winning awards for about the last 6 years in everything that they are doing and everyone that they are providing to. As I said, these many different permeations throughout the region are now going global. They've identified a new site to expand the operations into the Philippines, which will be happening sometime next year. There is another site in South Africa that they've identified and will probably go live Q2. There's talk of them now winning a contract in a big infrastructure product in Saudi Arabia called, I think it's called China Dragon or Chinese Red Dragon project. It's a massive infrastructure project. And all of the 5 tenders that have gone in, every single one of them, whether they win it or not, will all plug into the neutral fuels. So for neutral fuels, it doesn't matter. They will be supplying the biodiesel for all of those 5 companies who win the tender for the bids for this big infrastructure project. You can Google this a lot more and find out a lot more about that Saudi project. But again, the fact that Saudi is now leaning on Dubai, its neighbor, because they're interested to see what they're doing. And again, there's supply and demand issue, and there's great CSR angles as well. The bond itself and the company growth has been exponential in this last year. We're down to about the last $3.5 million in Series 1. We are currently structuring Series 2, which will have the potential for a buyout and an IPO in 2024. Series 2 may well be a convertible bond, but that's TBC at this precise moment. But suffice to say, Series 2 will be a $25 to $30 million bond. Same sort of coupon, around about 8%. Same structure as this coupon. It will have, again, the investment grade rating, senior secured asset-backed components that the current Series 1 benefits from. In addition, I'd like to just share my screen again. I've got another little quick video again to just engage you with. And again, we can send this out to you guys. It has been converted into a few different languages. And again, for the guys in LATAM watching this, we do have this in Spanish as well, just to let you know. Bear me 1 second.
Transitioning global communities away from carbon reliance is a serious challenge. In order to achieve the Paris Agreement of keeping global warming under 2 degrees, $53 trillion must be invested into clean energy. The International Energy Agency suggests using green bonds. A green bond is a bond whose proceeds are used to support climate-related issues, to encourage sustainability on other types of special environmental projects. According to Moody's, 2017 saw a record high issuance of green bonds, totaling $161 billion in investments. There are several advantages for investors of green bonds. 1. Green bonds provide a greater diversification of their portfolio. 2. Green bonds answers investors' demands for more socially responsible projects. 3. Green bonds provide stable returns. Neutral Capital Finance PLC recently issued a $12 million USD senior secured rated bond due in 2024. Senior because investors benefit from priority of repayment in case of bankruptcy. Secured because the assets and the debts are held in a separate vehicle that is bankruptcy remote. Rated because ARC Rating, one of the leading rating agencies, has granted Neutral Capital Finance PLC an A- rating. Investors must ensure they will receive their principal at the end of the period. To verify the quality of the credit of the issuer, investors may rely on the work of a rating agency. The role of the rating agency is to evaluate whether the company is financially healthy and able to repay its debt. Neutral Fuels' pioneering strategy is based on a city-scale biofuel model where local waste streams are converted into biofuels. The success story of Neutral Fuels has already been covered by Bloomberg, CNN, and the BBC. Neutral Fuels' business model is already proven with partners such as McDonald's, Del Monte, Nestle, Big Bus, and other well-known international brands for the purchasing of the biodiesel. How to invest? For investments over $125,000 US, you can either invest directly through your bank or your broker. For investments under $125,000 US, the investment is available via direct subscription or via investment platforms. You are wondering how we got an A- rating from one of the leading rating agencies. Let's schedule a 30-minute call or meeting and we will explain it to you.
Now, again, I hope that little snippet there was useful for you guys. This little video explainer can be, again, used if you did want to send it out to your investors, but it is more aimed from a B2B market. One thing I will say about it right now, since probably just before lockdown and now since sort of post-lockdown and since the pandemic started, more and more investors from an institutional level as well as a more retail level are impact investing. They're all over the word impact investments, green investments. I think because one's had time to reflect since everyone's experienced different lockdowns at different times, that the world is now trying to become more greener, more healthier, and I think people have become more conscious. The latest buzzword now that we are seeing is definitely, has it got an impact investment angle? Both of our bonds do, I'm proud to say, but equally, I think people are more gravitating towards things that have a feel-good factor about them. And I think impact investment is definitely the way forward over some other more sort of esoteric or sort of traditional type bonds that are out there. I think people are now still wanting the benefits of a fixed income strategy, which has obviously, benefit from, but I think again the fact that there's that feel good angle, that they're doing something good for the world, I think is a bit of a nice have. It's not a must have, it is a nice have, but people are definitely moving more towards, I think, impact investments as a whole. One thing I will say about Neutral Fuels, we send out the monthly newsletters with various links to all the press to demonstrate just how well this company is doing, not just obviously on the local GCC and MENA levels, but globally, how what they're doing is setting a precedence to other global organizations. They are in a very, very, very good position right now in terms of the expansion they've gone through since we've started raising for them, and with the future series that we will be doing with them as well. It's got a great story. It's got a great catch line for, the smaller retail investors, the man in the street. You can play them the McDonald's video and they will understand what it is doing. In addition to that, the newsletters we send out will actually kind of glorify the other brands that I've not mentioned yet that are all plugging into what Neutral Fuels are doing. And obviously the various awards, the green energy initiatives that they're involved in throughout the whole of the GCC and indeed the MENA region in itself. I think it's, in summary, it's one of the best performing sort of fixed income bonds out there at the moment. It's an 8.25% per annum paid every quarter. One thing I will say now that we are 18 months into that bond, it's only got a life of about 3.5 years left in it. Which is actually quite a unique selling angle, because right now, understandably, people are looking for shorter term investments. If we went out there and said it's a brand new bond, it's got 5 years, I think that people are like, that's a little bit hesitant, can't really plan for too long, 5 years. They're more comfortable with planning for 2.5 to 3.5 years. Then this naturally sort of ticks that box as well. So again, if there's any sort of questions at the end, I'm going to present next up with the DCM bond, our newest addition to the Stag's Head stable of products that we've originated. Kev?
Peter, I think just for the sake of a couple of questions that I've been submitted by WhatsApp and a couple I want to raise myself, I think we box off the questions now for NCF rather than two sets of questions at the end. So you've just touched on one that came in, a question that come in, but you've then just touched on then, which was maturity. So what is the maturity date for the bond?
April 2024.
Okay, excellent. And another question is around the coupons. So somebody's asked if the coupons are quarterly or semi-annually paid.
They are quarterly coupons. From memory, April, so July, September, and January. I forget the exact dates. I think it's the 19th, but it is. The dates are mentioned on the fact sheet and in the IM of the frequency, the exact dates, but it is. And we also, just on that, Kev, we send out the LSE coupon announcements, which we incorporate into one of our newsletters.
I was going to say that I do know, that every coupon has been paid on time to date, because I do receive from yourself the notice that comes out when the coupons are paid. So that again is nice to see as well, and something that we will share out with the network. Another question is, how much of the raise is still available, or how much is still left, and when do you anticipate it filling?
We are currently at 3.2 million left, and I would say it will definitely be done in the next, I'd like to think it'd be done before Christmas, because there's a few little bigger pledges out there. And I think in view of what you've mentioned earlier, people have been a little bit reticent the last couple of months. Q4 was always a very busy time for people raising money. And we're now starting to see the trades trickle in again every single day. I think people who, like you say, been preserving the liquidity, now they feel more comfortable. Things are starting to settle a little bit in the investment world. So they're now thinking, okay, I'm going to go and park this, 50 grand I've got saved or whatever. And they just feel a little bit more understanding of that now.
Yeah. Of course. And a question submitted through the Q&A just states, can the bond be sold before the maturity date? So I guess this is a common question.
Yeah. That's a good question as well. I think, look, the best way that I should simplify this is all of our bonds that we structure are what we call freely transferable. What does that mean in the grand scheme of things? Okay, they're not illiquid, 100% illiquid, but they're not 100% liquid. They fall into the middle band. But it does mean that, for instance, if an investor buys their bond today and in a year's time they want to exit that position, they can, as long as they find the buyer for it. It's not your job, it's not our job, it's not the advisor's job, but it does mean they are freely transferable. They are not locked into it for the full term. Although, in my opinion, it should be sold as a buy and hold strategy because, invariably, yes, you can put your position up to sale. How long will it take for them to find a buyer? Well, that's the $64 question. One thing I will just press upon as well, at the end of year 3, both Neutral Capital and DCM have a call option that is callable by the sponsor company. What does that mean in the grand scheme of things? At the end of year 3, Neutral Capital Finance can, at any time after that time has elapsed, decide to call it and then refinance the bond for another series, reduce their cost of capital. There'll be a lower coupon, obviously, because that's one of the ways to reduce your cost of capital, but it means investors will get paid back their principal sum they invested. The only caveat to that is there is no actual time when they do it. It's just when they feel comfortable to do it, when they've got the next series lined up. But it does mean that there is the very high chance, and as we're structuring it for them, I can sort of safely say that there is a very high chance this won't go the full term, that all investors will get paid out or bought out of their positions earlier than the full 5 years. Because what you've got to remember is that's quite an expensive debt for the sponsor company to have. They will, at the earliest opportunity, refinance that at a lower cost of capital whenever they can. Is that going to be at the start of year 3? Is it going to be at year 4? Who knows? But the point is, it's inbuilt in the structure of the bond that they can do it any time onwards from year 3. So I hope that
benefits, I understand. So that with regard to that, the benefit for the end investor is that their capital is received back in full before maturity. That might be 6 months before, 1 year before, 2 years before, depending on the financial situation of the company.
That's exactly right. And I think in view of what I've alluded to, we're already working on the nuts and bolts of doing the Series 2 for them anyway. And the Series 2 will be a much bigger raise than the 12 million that we've done for them, which is quite a small raise for us anyway. But it will buy out the existing debt, and it's structured to buy out the existing debt, you see.
Okay, just clarity on that, because I've come across this before. So it's just a common question, and I already know the answer, but it's for the case of everybody else. If it is called early, let's say it was called 1 year early, so on the 4th anniversary, the payout at that point, obviously coupons will be paid to that point. The year that is still left to run, coupons would not be paid for what is yet to run, correct? It would just pay up and give the investor their full capital back. So the 5th year, so to speak, if it matured, if it paid early on year 4, the 5th year would just be, in essence, cancelled. There would be no coupon for that year, but you'd give money back to reinvest as you see fit. So for the IFA, okay, for you guys, it's a case of you will have that maturity early that you can reinvest in whatever product you see fit. And obviously, for Neutral Capital Fuels and for ourselves, we'd like to think that if you've got an early payout, if it redeemed early, then obviously there's a good chance you might look to put back into their new offering that they have at that time.
That's exactly right. That's it in a nutshell, Kev. Yeah, perfect.
Okay. I don't think, let me just check before we move on if there's any other questions submitted here. No. So I think that's it. I mean, the only thing I'll note is when we do send out some information on NCF, and with all of the presentations we've had over the last 2 weeks, with this one I will include the video link, which is for the award that was won, which was the Solutions to Climate Change Company of the Year, because it was quite an impressive win. And I think
it really was, yeah.
On this webinar invite, people may have seen that there was actually a link there you could go in and just watch that award win. So yeah, well done on that. So I'll leave you to pass on now to DCM.
No worries. Just lastly, just to close out on the neutral fuels, I didn't want to overload too many videos of you guys because I appreciate there is so much out there to see. I mean, it's a marketing person's dream come true, this bond, because there is just so much good press out there in terms of what they've done and what they've achieved. Which would lead me slowly into our newest offering from the Stag's Head Stables that myself and my business partner have spent the last 10 plus months structuring. It's in what we call the US multifamily housing market. If you Google US multifamily housing, just as an intro, you'll see that it is actually a $1 trillion industry in the US alone. What I like about it as well is that even with the various pandemics going on in a post-COVID world, there is still a huge demand globally and obviously in the US for US multifamily housing. Quite simply, what is multifamily housing? It's condos and apartments or dwellings that allow multiple housing occupants, families of multiple occupancies. So they're not massive schemes. They are typically small condos and apartments that are either 1, 2, 3 stories high with, you know, sort of 6, 8, 10 kind of condos and apartments. They're not huge skyscrapers or sort of flats as we call them in the UK. They are literally just, and sometimes they can be as small as, you know, just 4 little condos together. There's a huge demand for this in the US. Even before the pandemic hit, this had a fantastic backstory to it again. In short, these are all asset backed. They're asset backed because they are, you know, real estate. That's the fundamental element and component that underpins this investment. They are residential real estate, you know, sort of dwellings. One must remember, this is nothing to do with 2008, 2009 crash. These were subprime mortgages in a completely different asset class, and these are not to be confused. Whilst they are still residential, they're nothing to do with what happened in the previous sort of global crash. US multifamily housing, I think right now, in a post-COVID world, is bigger than ever. Quite simply, Dunross Capital Management, hence the DCM title, they've got a sister company called Surest Partners. Surest themselves are the operations management company for the acquisitions that DCM makes. They are buying up portfolios of small condos and apartments that already exist. They're buying them for between 25 and 30 cents on the dollar. So it's a hugely profitable model for them from the outset. They then obviously renovate them to a high standard, do a bit of little remodeling, and then they lease them and rent them out to families that are on low to mid income. Now, in a post-COVID world, I think we all know that there is more of an abundance right now than ever of families on low to mid income. Partners are losing their jobs, partners are being furloughed, you know, one of the other halves might be on a reduced salary and a wage. It's forcing them to move out of the current big house they might be living in, paying a big mortgage. They simply can't afford to pay that mortgage anymore, but they still fundamentally need to live somewhere. And this is the important part to remember, that, you know, elections, no elections, COVID, no COVID, people still need to live somewhere. And there's still going to be a huge demand for low to mid income housing. We have got a little video explainer done, which is literally just landed in my inbox, which I'd like to play to you, and then I'll dive into a little bit of detail on the brochure. Just as a few caveats to explain that one of the biggest elements into low cost housing, there is a particular focus right now on key workers, and that's again since the COVID pandemic took over. Key workers, nurses, firemen, medics, teachers, that kind of thing, they're all considered to be the key workers. Governments the world over are now really looking after their key workers, which is good to see, but they are also fitting the demographic of people that would be looking to take up you know, low to mid income housing. Where DCM's portfolio is heavily biased in what we call the Sun Belt, going from sort of Texas, Dallas down into sort of Georgia, Atlanta, and into the top part of Florida. Just in Atlanta, I think it was 2 months ago, they've Amazon have built a new distribution center, logistics center, and it's going to give rise to, I think, 7,000 jobs locally just in that area. Well, Amazon pay the kind of wages for people working in the DC center and the delivery drivers. They don't pay a great wage, but those guys are going to need to live somewhere. So again, it's going to exacerbate and increase the supply and demand dynamics just within Atlanta itself, where they've got quite a lot of their portfolios based. Anyhow, I am now going to do a quick screen share and just play you another little video, if you can bear with me 2 secs. Let's get rid of this one. And the next one is...
In an uncertain economic world, real estate offers many advantages to investors: predictable cash flow, higher returns and relatively low risk, and the possibility to benefit from capital appreciation. This is the reason why most investors would prefer to allocate a significant part of their savings to real estate investments. However, few investors know that the real estate market offers different potential returns depending on the type of real estate considered. Real estate can be classified into single units or multi-family residential housings. A multi-family home is a property that has more than one unit to live in. In the multi-family home segment, workforce housing is the sector with the brightest prospects for investors. The workforce housing market is currently outperforming upscale multi-family markets, with vacancy rates below and rent growth above the market average. Workforce housing is generally understood as affordable housing for essential workers, such as police officers, firemen, teachers, healthcare professionals, nurses, and medical personnel, with earned income that is insufficient to secure quality housing in reasonable proximity to their workplaces. Nowadays, it is increasingly difficult for middle-income workers to find affordable housing. This is due to a confluence of two factors. The construction of workforce housing doesn't keep up with demand. According to the National Low-Income Housing Coalition, the United States needs at least 7.2 million more workforce housing units. Moreover, in the past decade, wage growth has not been keeping up with increasing costs of living. In their report, The Case for Workforce Housing, the real estate consultancy group CBRE outlines the opportunity for investing in multifamily workforce housing. They note that over 100,000 multifamily units each year are removed from the market due to obsolescence, while the demand is growing. The workforce housing market offers a very rare case of diminishing supply, declining stock, and rising demand at the same time. More and more people looking for affordable housing. The COVID-19 pandemic is accelerating this trend, with more and more people looking for affordable housing, while wage growth is sluggish. This is the reason why investment returns are considerably higher in this segment than all other asset classes. This is opening a tremendous opportunity for investors to capitalize on the growing disconnect between supply and demand. DCM US Multifamily Homes PLC has just issued a $750 million senior secured rated bond to help investors benefit from this market opportunity. Senior, because investors benefit from priority of repayment in case of bankruptcy. Secured, because the assets and the debts are held in a separate vehicle, which is bankruptcy remote. Rated, because a US-based rating agency has awarded DCM PLC an A- rating. DCM US Multifamily Homes PLC lends the proceeds to Surest, a specialist originator with over 100 years of combined experience and more than $1 billion of commercial loans and apartment acquisitions. Investors can now take advantage of this tremendous opportunity by investing in a 9.25% US dollars bond maturing in 2025. How can you get started? For investments over 125,000 US dollars, you can either invest directly through your bank or your broker. For investments under 125,000 US dollars, the investment is available via investment platforms. Are you wondering how DCM US Multifamily Homes PLC is enforcing a strict risk mitigation policy to secure investors' assets? Let's schedule a 30-minute call and we will explain it to you.
I hope that makes sense there to a lot of people. Let me go back, stop sharing that. So in terms of DCM, as you'll see, it's a very interesting proposition. For those that aren't familiar with it, we at Stag's Head have a template formula where we reverse engineer our products to suit our networks. quite simply, we always have a laundry list of boxes that we as investors ourselves like to tick. You'll notice a lot of similarities between neutral capital finance and DCM in that they are all asset-backed, senior secured, bankruptcy remote, investment grade rating. And again, we also make sure that the quarterly coupon payments are paid every quarter and that they are a 5-year term with the call option at year 3. So DCM in itself is pretty much a cut and paste in terms of the structure. However, there is a slight error with that video, I must correct on, but it's not a $750 million bond. It's actually a $750 million MTM note program. This bond in series 1 is actually 100 million US dollars. And we've also done 100 million euros at the same time. So this first series is actually $100 million and 100 million euros. So that's a combination of 200 million in total from that 750 million note program. What that means in the grand scheme of things, it will allow us to do future series of the DCM bond, again, at a much lower cost of capital by reducing the coupon, which will then again be called, use the call option to buy out the investors early. As a real estate guy myself, I think I was particularly attracted to this when it came across my desk, simply because I always look for things that have a very affable kind of understandable backstory to it. I know a lot about US multifamily housing from businesses in the past, and I was particularly attracted to it because I could see that traditionally from my own experience within multifamily housing, that in the US alone, it's never been made in a bond format before. So this is completely unique. This has never been done or presented like this. Typically, it should also be noted that in the US, all the multifamily housing portfolios, they're all owned by JP Morgan, Morgan Stanley, Goldman Sachs. They own huge swathes of multifamily housing, which takes a lot of it out of the market. So what DCM have done is actually create something wholly unique as well, because of the more institutionally minded people out there will know that it's, again, taken up by the big conglomerates and the big giants I've just mentioned. What I like about it, again, being a layman investor, is the fact that you've got a real estate component that underpins it for safety and security. The real estate itself physically exists. There's no what I call underlying risk factors. We've tried to de-risk it as much as possible, in so much that the assets themselves exist. You know, we're not trying to raise 200 million to then go and build the assets, which inherently would create a risk. This is the complete opposite. The assets exist. They're able to buy them for a very low price, renovate them, turn them around to a high standard, buy more of the same, tick the box for that supply and demand dynamic that exists already and will exist even more so in a post-COVID world, as we've already touched upon. I'm just going to do another quick screen share just to quickly flick through again the fact sheet, if I may. 1 second, guys. So again, the fact sheet you'll see here, again, we talk about both series together, about what it does and obviously how it does it. So again, obviously, again, we've done a 9.25% coupon, 8.4% on the euro. It's a fixed rate bond with a 5-year term. Again, it ticks all the boxes from us in that we've got a UK PLC, which is divorcing the risk from the main DCM company. DCM exists as a US entity, but DCM US Multifamily Homes PLC is a UK SPV. Again, everything is done under UK law because it's a much more rigorous and arduous law system. And it's one of the oldest law systems known to man. However, we've created this separate SPV so it divorces the risk from the main parent company. When we dive into a bit of detail and we explain this, what's called a bankruptcy remote structure, a lot of people understand it's actually done for the benefit of the investors. There are so many opportunities I see out there that do not have this as a standard in the structure itself, which obviously scares me a little bit. By having a bankruptcy remote structure, it means quite simply that if we're raising $100 million, it means firstly the CEO of the company cannot run off with $100 million himself. We've specifically set it up to be divorced, and you're divorcing that risk. That creates more safety and security for the investors. We know the assets are built. They're also pledged and owned by the UK PLC. Again, it adds more comfort and benefit and safety for the investors. Again, we talk about here in the paragraph in the fact sheet that the bond was issued by a separate legal entity to DCM themselves, as opposed to Serest or DCM. Again, it's not set up to be a typical sort of corporate bond, and the vehicle is set up specifically to issue the debt and is bankruptcy remote. If you look at DCM Multifamily Homes PLC, it's a new company. It holds no assets and no liabilities. It's completely set up to be divorced, as I say, to create this kind of additional safety. Again, it's you'll see here on the bond information. Again, it's $100 million, 100 million euros. It's listed on the Frankfurt Main Exchange and the GEMS Island. The reason we get a dual listing is simply because we need it on a UK recognized, a UK HMRC recognized exchange. This ticks a box and allows us to sort of penetrate the Eurobond tax exemption rules. What that means quite simply is when the issuer pays the coupon to the clients, they get paid 100% of the coupon. There are some bonds out there that are not Eurobond tax exemption. So if you're paying a 9% coupon or 9.25% coupon, it means you would receive slightly less because it's not on a UK HMRC exchange. So we always make sure that the clients get 100% of all the coupon payments. Again, that video mentioned it's an A-. That's not quite true. It's an A3 rating by a company called Spectrum Credit. Spectrum Credit Rating are a US-based credit agency that are a smaller version of the S&P, Moody's and Fitch. Conversely, a few of their staff are ex-Moody's anyway. They use the exact same mapping ratings and algorithms as the big three do anyway. And they've actually been working with DCM for the last 7 years, rating some private transactions they've done. So they've established a working relationship and rapport in the last 7 years. They have alluded to us that there's every possibility that once they've bought 5 portfolios, DCM will be then, the rating will be affirmed by Spectrum Credit, and it will likely increase higher than an A3. We're still waiting to see once those 5 transactions take place, but the fact is it's looking very positive that it will increase higher. I can get you over what an A3 Spectrum Credit rating is equivalent to with a Moody's and Fitch. I think it's an A- equivalent, just to let you know. Again, the bond is eligible with UCITS, ISA, SIPS, CureOps, and again, it's on a number of the offshore life platforms. I can send Kev and Manuel the list of the platforms that it's available to invest into. If you have a client that's a high net worth client, an asset manager, a family office, they can actually buy these through their banks directly. Every subscription that they would do has to be a minimum of 125,000 USD or 100,000 euros, only because it is stipulated in the investment memorandum that that is the minimum ticket size it has to be. Again, if there's anyone there that did have any interest in getting their clients to buy it, purchase it through a bank, we can explain that process to you separately. Again, you'll look at all the key counterparties here as well. Again, we've got some pretty heavyweight companies there behind the trustees, the registrars, the market makers, and again, the issuer legal counsel, DWF, who the more astute people will notice we're also behind Linklease and Neutral Fuels. They are our law firm that we always use because they get and understand what we do as well. I think as well, it should be noted again that this DCM will also follow the same structure, that there's a call option from year 3. Again, on a bigger bond raise like this probably will actually be called at year 3, because it's quite simply, under a 750 million issuance and we raise 100 million euros and dollars, they will want to refinance as soon as they can. And again, there will be much more of a smaller coupon paid on the refi deals, but it will obviously allow them to pay out this initial debt originally as well. The bond itself is live. We did a soft launch in August. The first coupon payment has been made for the US dollar series on the 1st of October. Again, we send out to Kev and all the guys the LSE announcements to show the coupon payments been made. They're great tools to show your clients simply because you can show to them, look, the coupon payment's been made. One of the reasons we go for a quarterly coupon payment as opposed to biannually or annually is simply because it's one of my personal investment strategies. I like to see payments coming in regularly on the clock. I think when you see a payment coming in every quarter, it gives you the confidence. It's a comfort driver. For the IFAs out there, it allows them to go back, speak to their clients, maybe get them to reinvest. if it's appropriate. And again, I think more than anything, it just allows people to see that it is actually working. Personally, I think 6 months is the maximum I would go to on a coupon payment. Anything 6 months, a year, I think for me, too much can happen in a year, as we've all seen, that would, I guess, cause people to have doubts and get a little bit twitchy about things. But by seeing the frequency coming in every quarter, it allows people to plan. I think, again, if they're using that money to reinvest on the other side, again, they can obviously commit to it that way, knowing that it is a fixed income solution as well. In terms of just understanding this on the fact sheet here, you'll see Cerest, again, for those that haven't already read it, they are co-owned by the owners of DCM. They are effectively the operations and management company. They are the company that are what I would call the developer in the equation here, the real estate developer. And they are the ones that do all the renovation, the turning around, the acquisitions, as well as obviously borrowing the money through DCM. There's a brochure we can send out to you guys. It touches upon the multifamily housing market globally and specifically in the US. There's obviously these videos which we'll be sending out in the next 2 weeks that will be translated into some various languages as well. And again, I will always make myself available through Kev and Manuel that if anyone there wanted to do a more sort of detailed one-on-one presentation, I'm happy to jump on Zoom, on Skype or Google Hangouts calls and dive into a little bit more detail and go through the investment memorandum and the brochure if you have any sort of more questions and queries. We've tried to make sure that the brochure itself has an FAQ section in it. So again, a lot of questions we seem to get asked are actually in the investment memorandum and the brochure. You may find sometimes I'll always push people back to say, it's in the IM, please read it, it's on page such and such. So it's always keen for people to make sure that you do a bit of bedtime reading and just flick over the brochures, because I think a lot of the main questions and the pertinent questions will actually be explained or answered within the FAQ documents themselves. So Kev, I am happy to hand back to you guys. If you have any questions and queries, I'm happy to hear them.
Okay, thank you very much, Peter. Just a couple again. You've just gone through a couple of them, so I need to answer. One of the questions that come through, which I didn't answer on NCF, but also asked here, is with regards to which or any life companies or platforms accept these bonds. So that's something you touched on, and I won't get you to go through that list now because off the top of your head there's probably 7 or 8 different companies, and you may forget which ones are accepted by which. I'm sure they're probably the same, but what we'll do is we'll send out an email and I will outline where it accepts them and which life fund platforms you can indeed buy through, and those that have already accepted, obviously, therefore, you can get in at a lower value, so you can come through, I guess, at tranches of 10K.
Correct. Yeah, I think the minimums are actually, I think, 10K is the minimums, or whatever the platform's minimums are. But essentially 10K. Once the 125K has been sort of propagated, it kind of pierces it, and then it allows the, if you like, top ups from the platform to be as low as 10,000. That's right. Yeah.
Okay. And then another question that I had here was with regards, we know it's a new rate, it's a new bond issued July. How much capital has been raised to date?
So the US dollar, we're up to $4.5 million US, and in the euro, we've done 425,000 euros. Just to let people know, the euros only went live a week and a half ago. So, yeah. And
then a question submitted on the Q&A just states, you mentioned that they buy at a lesser rate, I guess, or a lower rate. Is this because they are old, or is it a distressed asset, a distressed sellout?
It's a blended mix of both, actually. It's actually normally, how do I describe this? They normally go into areas that wouldn't achieve a high price on the real estate. If you want to say, are the areas run down? Not necessarily run down, but they are probably the less salubrious areas where real estate can be purchased a little bit cheaper. And yes, they would need a little bit of TLC, a little bit of remodeling, but it doesn't cost much to do. Hence why they're buying them at 25 to 30 cents on the dollar. If you actually look in the brochures, and there is some more stuff I can send to you guys, if you look at the before and the afters, I mean, you'll see that they do renovate them to a very high standard, which then makes them really appealing to the end user, the actual people that are going to live in them.
Okay. I assume as well there's a fair bit of government support with it being workforce housing.
Yeah, absolutely.
A previous role that I've had as well with regards to the, knowing a bit of inside knowledge on how the government deem certain housing projects. So, first-time buyers, workforce housing, things like that, housing for low-income families, etc. They're always going to be put to the forefront. And I think as you put in your graphs and your presentation, there is a clear demand within this kind of area for housing anyway.
Yeah, I think as well, in the post-COVID world, this fundamentals that people do need to live somewhere, and the fact that, again, they've got the support of the local councils in the various different states or boroughs. And again, there's obviously a lot of hardballing that goes on, but it allows them to basically, they offload, I guess, portfolios that would be quite hard to sell. They know that they've got the end users lined up already. They only have to spend a small amount. And as I say, they're buying them 25, 30 cents on the dollar. So it's a hugely profitable model for them. And again, if you look in the IM and the brochure, they've got very few delinquencies. That is huge in and of itself,
Excellent. So yeah, no other questions from there. So that was excellent, Peter. Thank you very much for your time today.
You're welcome. Thank you for having me.
What I'll say is just referring back to one question that was asked with regards to NCF, which is applicable to DCM. I wanted to add on at the time, and we got distracted talking about something else. And the question was about redeeming. And we mentioned that these are non-redeemable by the issuer. So it's not like a fund where you can just sell your shares back and that's it. These are non-redeemable and should be held until maturity, but they are freely transferable. And again, just to stress, that means the onus is on you, the broker, or the client as investor, to find the buyer for that. So if I held the bond, then I could sell that to a friend, to a family member, to a colleague, and that would just be a simple share transfer or transfer of ownership. But I can contact the bond provider and say, I want my money back and I want to sell this product. So they are, in those terms, consider it illiquid, and they are not to be sold if the basis is in 1 year's time, you're going to want to redeem that. You need to invest in these with the full intention to hold until maturity. And if we're lucky enough for the terms we met whereby a refinance deal is done and they pay out early, then that's great, but they're not to be sold on that basis because that is not a guarantee and it's not a given. It is just a bonus if that occurs. Is that right, Peter?
That's absolutely perfect, Kev. Yeah, that's spot on.
Perfect. So that leaves me to say thank you very much to everybody for attending. I see a few of the names that have been on all 4 webinars, and I thank you all for your time. We will get these webinars, the recordings out to you, and follow-up information, including presentations, videos, and any specific questions that have been asked, such as which life companies or fund platforms accept each of the products. And that will be sent out to you early next week by myself. So again, thank you, Peter. Thank you, everyone, for your time, and we'll be in touch in the near future. Enjoy the rest of your day.
Take care.
Thank you. Bye-bye.